Hello everyone, welcome to another trade breakdown on EU. I'm gonna start off with a weekly time frame like always, and we'll see what is my high time frame drawn liquidity and how did I determine it. So on the weekly time frame, you can see that last few weeks we formed this CRT, we purged it and tested a key level, and since then we've been expanding higher towards first of all the CRT high and then eventually this weekly range high, which is our long-term drawn liquidity. This weekly range high is my drawn liquidity on the higher time frame, right? And if you've watched my previous breakdowns diligently, then you all would know that after forming this swing high and this CRT, my expectations were lower and I wanted to see a retracement profile before we start expanding higher again, right? I also gave you this order block, and this CRT low right here is my short-term drawn liquidity where I wanted the retracement profile on the weekly time frame to go to and end there, right? And you can see that since we took out the CRT low and tested the weekly order block, we ended the retracement profile there just like I had anticipated and told you, and we started another expansion leg higher. For this expansion leg, my first round liquidity is this weekly range high. That's the least you're going to expect price to reach to, right? So on the weekly time frame, based on all of this price action, I determined my drawn liquidity to be this weekly range high, and I wanted to look for longs toward this drawn liquidity, right? This is how I determine my drawn liquidity and my directional buys on the weekly time frame. Now let's go down to the daily time frame and let's see how we can refine this drawn liquidity even more and how we can build even a much more sharper and clearer narrative. On the daily time frame, we've got the same framework, right? We took out this range low, and since then we've been moving higher towards this range high, which is our drawn liquidity. Now yesterday I was looking for this daily CRT low to be taken as a short-term drawn liquidity before moving higher, but price expanded right away without taking it out, right? And that is why I had skipped Tuesday, because I did not found any trade idea on Tuesday. And after Tuesday's candle ended or closed, we had found this new price action, right? And then instead of forcing the previous price and narrative that I had, instead of that I adopted to this new price action and started anticipating price to expand towards this range high straight away on Wednesday, right? So today on Wednesday, my drawn liquidity was this weekly range high, right? Which was also my drawn liquidity on the weekly time frame. This is how I determine my drawn liquidity. Now let's go down to the 4-hour time frame to see how did I build a narrative then and how did I select a CRT then. On the 4-hour time frame, you can see that the Wednesday's candle opened right here just below this high, right? And now as we were just about to take out the high, I wanted to see a kiss of death sequence on the intraday charts, and to take an entry there, obviously I first of all must have to choose and select a CRT properly, right? And then to position myself in that particular CRT. So what happened is that during the London Open zone, we had nothing significant, but price had a turtle soup on the lower time frame below the Asian session range low, right? And when the 1 hour, the 1 a.m. 4-hour candle closed right here, I decided to treat this candle as my CRT to look for longs towards the drawn liquidity, and also anticipated this FEG to be tested as a key level so that it could act as a catalyst and as a confluence to expand, to make price expand higher, right? What happened is that this 1 a.m. 4-hour candle and this 1 a.m. 4-hour CRT was purged during London lunch, but we struggled to test the FEG, right, on EU. But on the other hand, DXY tested the FEG, right, which means that we had an SMT divergence with DXY and we had non-symmetry in price. And we know that non-symmetrical market conditions or non-symmetry in price suggest that the current order flow isn't able to continue and we are likely to reverse, right? And that's how you can see that on the intraday charts, the bearish move that we had started during the London Open kick zone ended there, and we started our move and our expansion higher towards the higher time frame liquidity on the lower time frame again after we had this SMT divergence, right? I chose this 1 a.m. 4-hour candle as my CRT and started to look for order blocks entry on the 15-minute once it was purged. On the 15-minute time frame, you can see that the Asian session basically formed a ranging profile, which means that the Asian session was just a range. And then during London Open, we had a normal protraction profile below the Asian range low, right? And once the 1 a.m. 4-hour candle closed right here, I took this as a CRT and waited for it to be purged during London lunch at a key time, right? Before I could take an entry. And once it was purged, I waited for an order block or a model entry to form before taking an entry. It formed right here after this candle was engulfed, and after this candle turned into an order block, right? And after that, I put my stop loss below this order block slow and I targeted the CRT high. That was the trade breakdown on EU, right? These are simple things, right? Like there's nothing complicated in it, right? I'm doing the same thing over and over and again every day, and the reason I'm making these breakdowns is to show you that you don't need anything unique or anything fancy, right? You just have to follow the same sequence, the same process, and the same analysis over and over again every day, and you have to show up every day and do all of this, and you just have to do what you did before, right? I'm not using anything unique. I'm doing the same thing. First of all, I start off with determining my drawn liquidity, right, which I do on the weekly and the daily time frame, and then I go down to the 4-hour time frame to find a CRT there, to look for key levels there, and if we have an SMT divergence there, use that as a confluence and build a narrative there with the help of the open high low close concept, with the help of weekly profiles, with the help of intraday profiles, and all of these other concepts, right? And with the help of those concepts, I build a narrative there on the 4-hour time frame, and then I go down to the 15-minute time frame to wait for the CRT to be purged that I chose on the 4-hour. And when it is purged at a key time, I then align myself towards the higher time frame drawn liquidity and in the direction of the narrative that I built, and take an entry there in the form of a model 1 entry on order block entry, right?